The monetary policy rate, which is of keen interest to businesses, signals the rate at which the central bank will lend to commercial banks. It also subsequently influences average lending rate on loans to individuals and businesses. The key rate at the start of this administration in 2017 hovered around 25.5%. This also fed into the average lending rate, which was above 30% around that time. Gradually, however, the central bank implemented consistent cuts in the policy rate, which led to its downward trajectory. From the highs of 25.5% in January 2017, the policy rate dropped to 20% in January 2018, in January 2019 and 2020, 14.5% in January 2021, and all the way to 13.5% in June 2021 before being raised by 100 basis points to 14.5% in November 2021. It's now been raised by a total of 450 basis points since the start of the year. In his address to the media, Governor of the Central Bank, Dr. Ernest Addison, noted that risks to inflation are on the upside, hence the need to take a decisive stance to address current inflationary pressures.
The heightened uncertainty surrounding the inflation dynamics has weighed heavily on the domestic environment and significantly depressed business and consumer sentiments. The inflation numbers show that while food inflation has accounted for the increases in inflation over the past year, the recent jump in April shows that relative price increases in the non-food sector is accelerating at a fast pace, which provides information on the extent to which prices are becoming embedded. The bank's latest forecast shows a continued elevated inflation profile in the near term, with a prolonged horizon for inflation to return to the target band. Inflation expectations by consumers, businesses, and the banking sector have also heightened. The risks to inflation outlook are on the upside and emanate from the availability of inputs for food production, imported inflation, continued upward adjustments in export petroleum prices and transportation costs, possible increases in utility tariffs, and potential wage pressures. The second-round effects of these administered price adjustments would further amplify inflation pressures in the outlook. These considerations show that with a strong rebound in growth and the closing of the negative output gap, the balance of risk is clearly on inflation. The MPC took the view that it needed to decisively address the current inflationary pressures to re-anchor expectations and help foster macroeconomic stability. On the basis of the above assessment, the committee decided to raise the policy rate by 200 basis points.
Dr. Ernest Addison has meanwhile defended the inflation targeting framework being used by the central bank, saying it has served Ghana well. Some stakeholders, including the Institute of Economic Affairs, recently questioning the framework, saying it cannot provide a lasting solution to the country's inflation problem, hence must be reviewed. But according to Dr. Addison, the framework has been effective so far. The governor, meanwhile, noted that in support of the efforts of the central bank, broader efforts are needed on the supply side to effectively curb the rise in inflation.
We are not denying that there are supply side factors also at play. You look at what is happening on energy prices, right? You look at what is happening on the food side. These obviously are also areas where we need broader, efforts to try to manage the impact of, let's say, food production, for example, on our consumer basket.